Ever wondered how the solar industry has been performing of late? It's been quite a rollercoaster ride. The MAC Global Solar Energy Stock Index saw a significant drop of 30% year-to-date in 2023. This was a stark contrast to the extraordinary gains of 67% in 2019 and a whopping 245% in 2020. However, the index did see a slight dip of 26% in 2021 and 5% in 2022. The MAC Solar Index tracks the performance of the US-based Invesco Solar ETF and the European-based Invesco Solar Energy UCITS ETF. Solar stocks experienced pressure earlier this year due to rising US and European interest rates, which increased the financing costs for solar projects and led to some project cancellations. Fortunately, a glimmer of hope appeared when the US Federal Reserve and the European Central Bank indicated in December that their rate hike regimes are likely over and that interest rate cuts are likely in 2024. Solar stocks also felt the pinch from a drop in polysilicon and solar module prices as new production capacity came online. This price decline impacted the profit margins of manufacturers of polysilicon wafers, cells, and modules, who make up about 30% of the total weight in the MAC Solar Index. The remaining 70% of the index weight is in installers and operators of solar systems, or manufacturers of non-module solar components such as inverters, solar glass, and solar trackers. These sectors stand to benefit from lower solar panel costs, increased solar demand, and rising unit sales in the long run. The decline in solar costs this year has made solar power even more competitive against its rivals. This is why solar is emerging as the preferred source of new electricity generation plants, outshining coal, natural gas, and nuclear power. The European solar sector has been grappling with a buildup of solar panels in warehouses due to reduced demand and supply offloading by Chinese solar companies. This inventory overhang is expected to be cleared during 2024. Meanwhile, the US solar supply situation remains tighter due to US tariffs and the blockade of some solar products from the Chinese province of Xinjiang. Yet the US is on the brink of a manufacturing boom. The Inflation Reduction Act has spurred this by offering a 10-year tax subsidy for both the manufacture and installation of solar products. This law has already led to the announcement of 51 new or expanded solar manufacturing facilities in the United States. Despite recent challenges, the global solar industry continues to thrive. Bloomberg New Energy Finance is forecasting a robust solar install growth for 2023 of 64% year-on-year, following last year's growth of 39% year-on-year. They also predict strong solar growth to continue with annual growth of 24% year-on-year in 2024. In 2022, the global solar industry grew by 39% year-on-year to a record 252 GW. Over the 5-year period from 2017 to 2022, solar installs showed a compounded annual growth rate of 20%, making it one of the highest sustained growth industries. To summarize, the solar industry has faced its fair share of challenges, from fluctuating stock indices to rising interest rates and price declines. However, with falling costs, increasing demand, and substantial growth forecasts, the future of solar looks bright.